so excited waiting for next Wednesday for that big 25 basis point cut by the Fed, believing that the 10-year Treasury is going to come way down, and that means your mortgage rates are going to come down, your auto loans are going to come down, your business loans are all going to come down, and we're going to grow. Well, wait a minute. Let's check out history. If we go back to September 17, 2024, it didn't work that way, did it? No. When they cut 50 basis points, not 25, 50 basis points September of 2024, what happened? 10-year Treasury yield didn't come down. It turned around and went straight up, which means your mortgage is going to cost more, your cars are going to cost more, credit card. It did the opposite, just the opposite. Here, look at my chart. Now, but again, the stock market went up. That's the important thing I want to tell you about. The stock market went up. So if that occurs, that all of a sudden we see the 10-year Treasury yield don't go down, instead it goes up, it should pull the market up with it. Here's why it didn't work. One, inflation remained above the Fed's target. Well, we have that today too. There's no different. In fact, it's worse today. A cut of just 25 basis points was not enough to stimulate the economy when they did that, right? It was 50 points when they did that. So why will our 25 points be enough when 50 points wasn't enough, when things are worse now than they were then? Third, our deficits keep on climbing. The bond market knows that. And the bond market said, wait a minute, we're not going to bring our yields down. Why would we do that? Because the deficits keep on growing. We got to attract investors. We got to have high yields. UK, Japan, China, they're not buying our debt anymore. They're buying gold. We got to have higher yields. So those three things are what made it fail. And the funny thing is, it was 50 basis points it couldn't work, that cut. But remember, if we have a repeat, the market should go up just like it did before. See on the chart here? Now, another thing that's interesting too, that's going on, NVIDIA. Now, NVIDIA is not going to end up like Enron, that's for sure, but we could get a big, big pullback. So you got to be aware of what's going on. So always remember when they tell you to buy, and they give you buy signals, and your stock is above the three moving averages, that's great support. That's what you want. And when they say buy, okay, and they keep those buy recommendations all the way up, that's good. And that's when you buy on a dip. That's when you buy on a dip in an uptrend. You don't buy in a dip in a downtrend. But again, what happened here, the same thing could happen to NVIDIA, okay? Now, remember the important thing when you got your stock above all three moving averages, that's great support. But when it turns over, and now all of a sudden it's no more support, you got all the pressure pushing down on your stock, where the stock's underneath the support, that will be a problem for NVIDIA, just like any stock. But here we're showing what's going on with Enron. Now, remember, on the way up, this is a dirty trick they play. On the way up, they have buy recommendations. Well, why when it started to go back down did they keep the buy recommendations? And all the brokerage houses were telling you to buy on the dip, and they were also telling you, hey, this is a good deal. And everybody was just, again, they kept the buy recommendations on. And then everybody would buy on the dip right here. They buy on the dip, buy on the dip, buy on the dip, buy on the dip, buy on the dip. Because they had a buy recommendation. It should have been a sell recommendation. But why don't they change it to a sell recommendation? Because remember, Goldman Sachs, Morgan Stanley, all the big brokerage houses, they represent the biggest clients in the world, the big pension funds, okay? And they take care of these people because they make a fortune on them. They can't let them get hurt. So they need you to buy on the dip. They need you to cost average down. They need you to keep the market up. Keep pushing the market up every time you buy on the dip so they can get their clients out. Keep getting their clients out. And then when their clients are finally out, here's what happened with Enron, right here. When the clients were out And I remember this. Kramer was in there saying, buy, 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 buy. You're a fool if you don't buy. And once all the clients were out, look what happened. It just collapsed. Now, again, I'm not saying, okay, that NVIDIA is an end run. I'm just showing you the pattern. That's all. It could, again, we could get a severe pullback on all the tech stocks. So when you see the buy recommendations when it's going down and they didn't change them to a sell recommendation and they keep telling you to buy in a dip, buy in a dip, buy in a dip, cost average down, now you'll know not to be fooled. You'll know, hey, I'm going to short like the professionals and make money on the way down instead of losing my butt. So that's it. So we'll see what happens. philsgang.com. Check us out.